Diego Casanello joining us as well this morning, Global COO Crop Protection at UPL. Diego, good to have you with us. Lots to discuss in the earnings this time. You know, volume growth has been strong, but margins have been muted on a year-on-year basis. Just talk to us about the reasons behind that. Okay, Diego, can you hear me? All right. I think, Diego, if you can hear me, we were wondering, you know, in terms of kickstarting a look at those numbers, volume growth has been strong. Volume growth has been strong, but margins have been muted on a year-on-year basis. If we could talk through some of the factors at play this quarter.
Yes, we have had very strong volumes, this growth this quarter, thanks to a very good development in Latin America. Prices has been only slightly down, but if you think about 15% growth on volumes, this has been a very strong quarter for us in terms of gaining market share in the agricultural market.
The revenue mix this quarter has been more tilted towards strong growth from Latin America, but weaker margins there have impacted performance. Is this a trend that you think will reverse in the second half of the year?
So Latin America has historically a slightly lower margin compared to other regions, and this quarter the geographic mix have been more weighted towards Latin America. In the northern hemisphere, we have had some drought conditions, but as these markets come back, also the higher margin in those markets will basically normalize our margins moving forward.
Have erratic global weather patterns played a very large role on your sales? I mean, I would have never thought that sitting in Mumbai, we would be experiencing rain in the month of November. Globally also, my understanding is that this time rain patterns and crop patterns have been very erratic. How does that change your business?
Well, you know, weather has been always, there have been always variations across the world. Important is that you have a global footprint that allows you to hedge those risks. You know, we are also not only in the business of protecting the crop, of crop protection, but also in the business of sustainability. We are offering technologies that support farmers, for example, with respect to climate change, making them more resilient to climate change. So in terms of our business development, there are pros and cons. Overall, we see this as a net positive.
Okay. You know, let's talk about debt. You know, if you could share with us any plans there, you know, for debt reduction, or do you see it peaking in Q3 before it reduces? Because the market, of course, continues to have some, you know, queries or concerns regarding the debt levels. What can you share with us on that?
Well, we have a guidance of $500 million of net debt reduction. We are tracking well with respect to what we are planning to do for this year. Our working capital build-up is basically ramps up throughout the first quarters, and then in Q4 there is a rapid decline. It's a seasonal business, so we are still tracking well to hit that guidance that we gave.
Okay. Besides that, I also wanted to understand as to how the synergies from Arysta are actually playing out, and are they playing out on expected lines?
So we have, announced a synergy target of $200 million on cost and $500 million on revenue synergies. We are ahead of our plan on cost synergies and revenue synergies. We have been consolidated plans. We have been consolidating offices. We have now a much, let's say, broader portfolio, and are able to bundle those portfolios and basically help our customers offer complete crop solutions. So we're tracking very well, and I think we will have this year a success story with respect to synergies.
You know, if I track UPL, every 2-3 years, sometimes less than 2-3 years, you've been acquiring companies, you've been acquiring global companies, and that's how you managed to really build a great, formidable, and a strong franchise. How come I've not heard any acquisition news in last 18 months? I mean, that's unusually long time for UPL not to acquire an asset. And right now, are you looking at acquiring a significant asset in next 6 months?
Well, I mean, we just actually finished the acquisition of Arista Life Science. In February, we closed that deal. This was a major acquisition. The business was as big as UPL, and now we are number 5 globally in crop protection with revenues of almost $5 billion. This was a major acquisition. We're now in the midst of the integration, and that's where our focus is. You might see here and there some smaller acquisitions in the short term, but right now it's very important to focus on execution and continuing to grow as one of the leaders in this market.
FY20, now that there was a bump up in your debt because of working capital requirement, where do you think your margins will settle? Can you give me that broad band?
Well, I mean, you have to see the historical margins of Arista and the historical margins of UPL. And, I think analysts are very well aware about how we have tracked in the past. And if you apply that same logic, you will see that margins are in general very stable in this business. So we're not concerned about margins. I mean, again, this quarter, we had only a minus 1% price decline with 15% volume growth in a market environment that was very complex. I mean, if you see, especially the situation in the Northern Hemisphere, the drought and the very, highly, call it competitive environment, our margins have been very, very healthy, right? Once again, the geographic mix plays a role. As North America and Europe comes back, you will see margins going up again. But historically, in average, you will see that our margins are very stable.
Just one point, and my research analyst who tracks your company insists that I get this view from you. As per DuPont, they've highlighted that soybean as well as corn season has been delayed this time around. Have you done any pre-placement in Brazil?
So in North America, the planting has been delayed. I mean, you remember there have been floodings in North America, and that has reduced the area of soy and corn last season, and that has impacted some of the competitors that are very heavily exposed to that segment, especially on the seed side. Our seed present is in other markets. I mean, we have rather a niche market segment in very high value niches around the world. So we were not exposed to that situation. The contrary, I mean, in the US in particular, due to the China-US trade tensions, customers have actually looked to buy more from UPL from the perspective of hedging the risk that was arising out of those tensions. So there was an impact on the, call it the total area planted, in particular in corn and soybean, but there was a positive impact from the aspect that we were a welcome hedge to that situation.
To talk about where the implications of trade war are, you are an Indian company with a significant global presence. Countries are fighting with each other. You managed to grow in the last 10 years because the world was opening up and it was easy to trade. What do you think will happen in this environment where trade war is back, trade war is real? How will this have an impact on your geographical presence, your manufacturing facilities, the local businesses? Because you work a lot with farmers, and agriculture is a very, very sensitive topic in today's trade war.
Yeah, I think we hope that overall the trade situation normalizes. I mean, we can say today the situation is a net positive for UPL, but over time, we believe in fair trade. We believe that actually stability in these markets is a good thing. Our business is very local. That means we formulate our products in the markets where we actually also sell our products. That in itself is a protection against these disruptions. India so far is in good relationships with most of the markets we are doing business today. But again, we hope obviously that trade tensions come down, and that especially for our farmers, because farmers need planning stability.
Diego, just going back to Arista for a moment on the acquisition integration charges, we almost had, I think, 5 billion rupees of charges there. Is that the end, or would there be any further impact expected?
Well, we have tell the analysts that we are expecting around $60 million this year of integration charges. If you look at the magnitude of this acquisition, I think this is a very effective integration. And the way we're trending right now, I think we have those integration charges very much under control. I mean, we announced our new organization on 1st of April. In February, we closed the deal. In 1st of April, we were announcing our new organization. We clarify our commercial policy to our customers very soon after. And while some of our peers that have went through similar processes have actually taken much longer, we are now fully focused on execution, and our customers, I think, are praising that, and we believe that it's going to help this year to really achieve our results.
Thank you so much for joining us this morning for that detailed chat on the earnings and outlook at UPL. Thanks so much. All right.
Thank you very much.